This is the Iron Trader, and this is the weekend edition. What we're going to do here now on the weekends is we're going to have just a little bit of extra here that we're going to add to the channel. So we're going to do some weekend videos, okay? It's basically more like a learning, just to keep you sharp and just to keep you, always into the old trading mood, okay? So like for today, what we're going to do is we're going to take a look at the charts. We're going to show you how to set up the charts and how to read the charts and how to really take advantage of the charts, okay? Like with double tops and double bottoms and breakouts and divergences, and give you a little bit of, a good round basis on exactly what charts really are. And then tomorrow we're going to do a video on trading, okay? For example, we're going to do scalp trading. We're going to look at swing trades, and then we're going to look at long-term trades. And then every weekend, what we're going to be doing is we'll do something a little bit different according to the charts, like seasonality, okay? We'll look at like all your big oil companies. We'll look at your tech companies. We'll look at retail trades and auto trades, and anything that has market related is what we're going to be doing, but it's more like an educational theme like here on the weekends versus what we do basically during the week. So let's get started. This video is for information purposes only, not a recommendation to buy stock, a commodity, ETF. Please like and subscribe. Thanks for watching. Okay, here we have your basic daily chart. Okay, now how I set these up is very, very simple. Now there's many ways to trade, okay? You can use the clouds, you can use Bollinger Bands, and I've used all that. For me, they're just not as precise, for how I like to trade, okay? You can also use Fibonacci's. Now, Fibonacci's are very good, and I use those like on a breakouts, okay? Like say you have, an all-time high on a stock of, say, $100. And you want to know where it's going. Well, you can listen to these talking heads on CNBC, and they'll say, oh, it's going to 500, it's going to 1,000. Well, that may be true, but what we want to do here is look at the path that is actually going on, okay? What is the next support level? So Fibonacci's come in very, very handy for that. But for everyday trading, I like something just a little bit simpler, okay? So here's how I set up my charts. You look at this blue. This here is an 8 SMA, okay? The 21-day, 21, that's a 21 SMA. We have your 50 SMA, and then we have your 100 SMA, and then we have your 200 SMA. Now, SMA basically is simple moving averages. Now, you can also use exponential moving averages, but I found the simple ones are just a little bit more, refined for what I'm doing. Okay, now when we look at this blue, well, these are price channels. And basically what they do is they give you like the recent highs and lows. I'll give you an example. When we had this candle here, okay, you're looking at 67.71. That was this line right here. Then when it jumped up, that's basically the bottom of this candle, which was 69.28, which is basically still in play. Now, we look at this price channel going across here. That was this candle. That was your recent high. That was 76.18. All right, now you can see where the price channel is moving on up here. So we got to see where it flattens off again like we do here. Okay, another example right there. Okay, you had your 79.60, and that was your price channel coming across. Okay, so you always want to put these price channels on. It just gives you just an easier kind of look and saying, okay, I got to look here. It's already there in front of you. Okay, now the charts, the way I have them set up, are pretty much the same way as all the big boys. So if you're trading through Goldman Sachs or JP Morgan or Wells or Bank of America or hedge fund, or even machines, this is pretty much how they have them set up. Now, they do a little bit tweaking. I use simple moving averages. They might use exponential moving averages. I use an 8 SMA, and I think it works really well. Some people will use a 9 SMA. I use a 21-day. Some will use a 20-day. So basically, this is how all the big boys are trading. So when you see all these resistance levels and you see that, this is exactly what they're using, the same as what I am. Now, indicators, well, we look here. Volume. Always want to look for volume. The key is the volume. Like if you're trading a stock or an ETF, I'll give you an example. UGA, which is the gasoline ETF. I trade it, But I'm more like a buy and hold on that because it doesn't do much volume. You do 20, 25,000 shares or something. That isn't enough for me because once I get rolling, I'll go in there and I'll buy, 10, 20, sometimes 50,000 shares or something. And that's just not going to work because bottom line, hard to get in, very, very hard to get out when you start dumping that amount of shares. Okay, so you always want to have something that does volume. Let's say 1,000,000 shares and above. That way, you can get in, you can get out. Okay. Now, one thing about ETFs you have to understand: these are trading vehicles. That's what an ETF is. Okay, it's not buy and hold. You can do swing trades with these, but for buy and hold, it's just really something you don't want to do here unless you have an ETF like TQQ. That thing seems to work pretty well here, like for the NASDAQ and for your big tech. But see, the ETFs, they rebalance that every day, so you don't get the true picture. So you never really see me charting the ETFs. You always see me charting like the actual commodity. Okay, like here's crude. Well, I trade UCO, but you're better off, charting the actual commodity here. And then wherever that target is, that's where you buy it and that's where you sell it on the ETF. Okay, and then volume, I say, very, very important, very, very key. Now, your RSI here, relative strength index. This is very, very key. And I'll tell you why. You can look at it and say, well, it's at 64 and go to 7. Well, yes and no. I also looked at this as a place to look for divergences. I'll give you an example. When we look at the high here, look at this RSI. It's at nosebleed territory. And then we look at where it is, okay, comparative. All right, then what we do is we come up to this candle. You say, wow, that's a higher high. But look at your RSI. See this negative divergence. That's already telling you that this is going down. It's not going to stay up there for long. And where does it come? All the way down. See, negative divergence. Now, let me point out a positive divergence. So we have your RSI. You're sitting here below 70. And look where your candle is. Okay, you got a low. Now what we have here is we have a lower low. But look at your RSI. It's a higher low. See? Positive divergence. So anytime you can get kind of advantage or edge, you say, hey, this is coming down here. I know exactly, but this is a good positive divergence. This is going higher, and look where it did. Now, you always want to look here for different kind of patterns. I'll give you another example here. Bear flag. See this? Right into it, and then all the way on down. This is the classic bear flag right here. So we have a big red candle, and then we had the green red right on up here, and then what do we have? Another big red candle. Beautiful bear flag going on there, so you know that in advance. Now, you look at this one, and I always point out where, okay, another green candle, red candle, and then what can we do here? This might be a possible bet. But when this candle here closed above that, well, that negates that bear flag very, very easily, okay? Another pattern which is very simple you want to look at is this is a perfect double top situation. So it ran up, and you got all the way to 79, 77, came on down, and then retested it at 79.60. So you have a lower high. Okay, that tells you got to get short right there or sell your long position, okay, however you trade. So that's a classic, okay, double top. Now, I'm going to give you a couple examples here of really nice double bottoms. So we take this candle here at 70.06, and then we come to this candle at 70.13. So you have a double bottom with a higher low. And look how nice that ran up. So you had 1, 2, 3, 4 days are up. Now you sell into that for the simple reason, see, that's a topping tail right there. If it held that 50-day, well, then you could hold your long position and it could go higher. But it didn't. It came down. Tells me you gotta sell. Now, another nice, really double bottom was this right here. So you're looking at 70.50, and we come to this candle at 70.47. Just a classic double bottom. And then now look how this one went. See, we rolled and rolled right on up here, and you're still going. Okay, it wasn't like a topping tail where, if it held at 50, you could have kept the position. If not, you want to sell it. Now, the key to how this was rolling is watch that 8 SMA. See how nice that is? Now, the 8 SMA is above your 21, above your 50, and you're headed for the old 200. Very, very nice. So as long as that 8 SMA here holds, okay, then this is very, very bullish. Now, if it rolls over like it did here, okay, so where, okay, it was rolling, and then it rolled over and your price is below that, what happens? See, now your price is fighting that 8 SMA all the way on down. So as long as this price is above that key 8 SMA, you're looking very, very good for a bullish and a higher trend. Now, when you look at this 21 SMA here, look at this. This is starting to roll up here, and your 50-day is finally flattening out. This here was just on an absolute waterfall, okay? Now look at it, starting to curl up. If your 21 can get above, this is a good, tells you that you got a nice bullish trend off of this key double bottom. So these are the kind of patterns you want to look at. See, the double bottoms, okay? The double tops, these divergences here. That's how you read the charts here to give you that advantage. Don't just say, oh, some guy on TV said it's going to this. It may go there, but how long is it going to take to get there? For one thing, the next thing is, is it going to, how many corrections you can have in the middle? So if you are a trader like I am, you can make a lot of money and basically a two-way trade. Okay, so you could have went really nice and long, and then when you see this red candle close below your SMAs here, that told me not just to sell your long position, but to get short and ride that short all the way down the same way it was here. You stop right there and then say, okay, I can take a long, but this could be a classic bear flag. And it was, and then all the way down, okay? Same way here, as a nice classic bear flag, and then takes it all the way down. So you can get yourself a really nice two-way trade. So just a quick review here. I use an 8, a 21, a 50, a 100-day, and a 200 SMA. Simple moving averages, okay? And then with price channels, gives you a nice, easy way to look. So to say, I don't have to look all the way here. It gives you that nice price channel, okay, all the way through. Now, also what I do here is I use these candlesticks. So let's look at Fridays, okay? So what we want to do is we just look up in this area here, okay? So we look at this candlestick. So what was the high? 78.26. Okay, what was the low? 76.06, and it closed at 78.23. So these are your support and resistance levels, okay? That's how you have to trade this. That's why you use candles, not just for the looks of it. But that really gives you your high, your low, and your closing price. So what you want to do is always look to the day before. So when the futures open here at Sunday night, we want to look at the highs, the lows, and the closing against this candle, just like we did here. Now, see how we have a nice series of higher highs here, higher lows. See, that's just beautiful, beautiful. And we have your RSI here below 70, and your green here is above your red. Now, this here, your MACD, basically shows the momentum, okay, of the trade. Okay, so when we look here, and you see where that green, when a green goes below the red, you get a bearish look. Okay, very, very simple. See, look at how the green is below the red. See, very, very bearish all the way down. Now, when this popped up here, where your green is above your red, look at that. See, that shows the momentum is positive. Okay, so I don't use that many indicators, basically just your volume, your RSI, and your MACD. And that's really all you really need to trade. I mean, they have a zillion indicators out there where you can do this and this and this. And all that sounds good, but you can't spend your whole day just watching these indicators. What you have to do is just pick out the ones that you want. I found out these three always work the best. Okay, so when you get that momentum where that green is above your red, then what you have? Momentum. Okay, and then when you get that, you add all that information together. You say, wow, this is the green is over the red. Okay, we have a positive divergence. Okay, your RSI here is moving up, and your 8-day is up. I got to get long. See how that is? So you add up everything, all your information, because realistically, your charts is your roadmap. Okay, now a lot of people, they use the fundamentals, and they use this, and they do that, and that all sounds good here. But bottom line is you're looking too forward out on fundamentals on this. But see, this is why I really like trading crude oil and natural gas, because they're always in play. Every day, there's something. Okay, so give Friday an example. Okay, so the Houthis there, they shot and they hit a oil tanker. Okay, so that oil tanker is on fire. Absolutely terrible. However, if you're a trader, you say, wow, I got to get bullish. Now, when this candle came down, you notice that the low on it was 76.06. Well, you look to that price channel and see where this is, 76.18. You say, okay, that's the support level. Now, if it closed below that, well, then you know it's going to come down to the 8. But again, it didn't. It hit down that area and it popped right on up and held half of that candle. That's always what you want to look at. So, you can look at fundamentals, which I do, okay? And I always look at, like, say, take your example of crude oil. I always look at the API report, the EIA report, the rig count. I look at all of that. That's all good. But realistically, you really need to trade the charts because that's what all the big boys are doing, okay? That's what the machines are doing. When it gets to a certain point, that's where it's going to go. Now, let me just look at this 200 SMA here. Now, look how this candle, see? The first time, very, very difficult. It's not going to get through it, okay? It's like, when you're a wild kid, okay? You want to tip over a Coke machine, okay? You got to rock it a couple times. You're not going to tip it over the first time. You know what I'm saying? And that's the same way with trading, okay? That 200-day is very, very strong. So it came right in there. That told me you got to sell. And then the next day, you want to rebuy because it's not going to get through the first time. So like what we have here, you can see how strong that 200 SMA is. Now, when you get to 200-day, especially when you get like on a weekly chart, these become a lot stronger as it goes. So you always want to look at your 200, your 50, and your 100-day. Your 8-day gives you a good tell on where everything is going. And once that 8-day is lost, just like it was here, then you know when that price is below, she is going to go lower. But when that price gets above, she's going to go just like here, she's going to go higher. Okay, so always watch these key. So keep it simple. 8, 21, 50, 100-day, 200-day. Okay, as far as your this goes, I go with the volume, I go with your RSI and your MACD. Again, keep it very, very simple. Put some price channels on here and just, trade what you see in front of you, not what you want. Okay, so bottom line, so you look at this chart here, 28, 23. Well, the next level, you know where you're going to go. It's going to be 79, 78. That's your 100 SMA. That's the next level where she's going to pop up to. Now, again, if you get above that, then we can follow the top of these candlesticks, the open, the close, all the way on up here until you get another retest. And just take these price channels and just come right on over, okay? Price channel, come right on over. Price channel, come right on. That's where you're going to go. Another thing you always want to watch is gaps and fills. Very, very crucial, okay, on the upside or downside, because gaps and fills are like a magnet, to a fridge. Okay, let's take a look here now on a weekly chart. All right, here we have a weekly chart, okay? Basically same scenario. Now, when you look at this, you can see this 200 SMA, how important and how crucial it is. How many times did it hit this, okay, and close above it for the week? Okay, that's the key. Now, you can slam on down, but as long as you close up for the week, look at that nice support, okay? So that's what you have to look here, especially like on weekly charts. Your bigger the numbers, like say your 50, your 200-day, your 100-day are very, very critical on these charts. Now, when you look here on this 50 SMA, 77.43, your price is right above that. So you say, well, what is the next level? Well, you got to look at that 21-day, 79.71 here on a weekly basis. Now, remember, this is a weekly basis, so we got to see how that all going to shake out, okay? So always look at that as on a weekly. Now, again, if you can get above that, then you got a target here of 85.54. And then what you do is you just start looking at the top of these candles, okay? And you take that all the way and up here until you get to your 95.03, and that's your retest. Now, again, if you can break out above it, then you can go higher. But see, like we had here, you had 130. Came all the way down here, you had a retest, and you couldn't even get back up to your 130 area, and then she just came right on down. So you're basically your 8-day, your 21-day, your 50, 100, 200-day, same thing, works great on here. Same with the volume, same with your RSI, and same way with your MACD. You want to put those on every chart. Now, you look at this MACD here. You see where the green is below the red, but you can see how it's curling up. That is your momentum. You can see how this is starting to break on up. And if once that green gets above that red, then you know you're going to go much, much higher. So these are just like a momentum indicator. Your RSI is great for divergences. So that's what we always want to look at. So you want to just take a look on all levels, your daily, your weekly, and your monthly. But right now, we're going to take a look here on a 4-hour chart and a 1-hour chart. All right, here we have a 4-hour chart, very, very clear. Okay, so I always point out the double tops, the double bottoms, the gaps, the fills, all that kind of stuff. That's always going to work out good. So you basically here, this is natural gas. You had 3.39 on the top. And then when we came here, 3.37. Okay, so you had a retest of that 3.39, but you had a lower high. That's classic double top. And then where did it go? All the way on down. But when it came down here, what did we put in for a low? You put in 2.31. And then we had a retest, basically, of 2.32. So now you have a double bottom in play. So you always want to watch this gap. Okay, so that's going to be a key. So you look at this, you have a high of 2.39. And then we look to the bottom of this candle, you have 2.54. So the first time it could not get there, came on down, but now you can see where it actually filled that gap. So you always want to watch gaps and you want to watch fills. But this was just an absolute classic, nice double top. Okay, now you could either say, oh, I'm going to sell my position, or it could be like me, sell a position and then short it all the way on down. Now, once it gets to this point, you got to take that short off. Now, what you don't want to do is say, I'm going to buy it right there. Well, you don't know if it's going to go lower. So you'll always wait for a retest. That is going to be the key. So we'll go all over this tomorrow when we're talking about scalping and swing trades. But I just want to give you a good example here. When you see a low, you just say, oh, geez, I missed it. FOMO. Oh, my God, I'm going to miss it. No, you're not. It's going to come down and it's going to retest. Does it 99% of the time, retest, and then you can have a nice rally on up. Okay, so that's what you always want to look at when you're trading these charts. Now, this is the same thing. You got your 8, your 21, your 50, 100, 200 day. And they all work very, very good in simultaneous levels. Okay, and then basically there's your volume, RSI, and your MACD. Works very, very good. So now this ran up here to 2.88, and then it came on down. But you notice that it made a higher low, which is always good. Rallied all the way on up here. Now we got to see if you can get through that 100-day, and then there's your big retest. So if you can break above that 288, then we come right to this price channel here, which is this candle, and you just follow it across. Then we come to this price channel, follow it across, follow it across, follow it across until you can get your big retest area. So here, like on your hourly chart, very, very clear. There was that 2.31, and there's your gap and fill, and then it came right on over. Okay, see how that is? And then that tells you when you put in a higher low, that tells you that's where you got to get absolutely long. Now, when you get up to the situation here where you have a little double top situation, you can sell your position. Never get greedy. Now, one thing about trading is you're never going to buy the top or sell the top. You're never going to buy the bottom. Okay, you're going to get lucky every so. But what you really want to focus on is that meat in the middle. If you start off on Monday with that meat in the middle, by the time you get to Friday, got a lot of meat there sitting there, okay? So that's what you want to look at. You never want to say, oh, I'm going to buy the absolute bottom. I'm selling the absolute top. It doesn't matter. Just be consistent. That's the key to trading is consistent. Money in the pocket every day, every day, every day, okay? That is going to be the absolute key. All right, let's look at some other charts here. Okay. Now, if you're scalping a trade, what you want to do is you want to use a tick chart. These tick charts work very, very good. Okay, they're fast moving, so So I always put on a tick chart here. We have a 1 minute, you have a 5 minute, and you have a 15 minute. Okay, if you want to slow the trade down, you can go a 1 hour and a 4 hour chart. But always, always watch that daily chart, that weekly chart, and then monthly chart. At least check that monthly chart, every day here, just to see the direction on where you're going to go. So where you have your net gas here, so we'll see when you see a pattern like this, okay, where you have a high, a lower high, and then a lower high, that tells me that is, when you see something like that, that's going much lower. So what you want to do is look for an opportunity here to go up higher, okay? So that is the key, which you always want to watch here. Is anything that'll give you an advantage to trading, to get in as early as you can, but to get out also. Because the last thing you want to do is just hold it, okay? And one thing you don't want to do with trading is say you're in at 20 bucks, just for example, okay? And the stock comes down to 18. Oh, I'm going to add. Oh, it comes down to 60. Now I'm going to add. Never do that. That's a complete loser trade right there. What you do is don't be afraid to use stop losses, whatever you can afford. Sometimes you can use a 3%, a 5%, a 10% stop loss, whatever you feel comfortable with here. Anybody trader out there that tells you that he's never lost money is totally full of shit. Okay, losing money on trades here is all part of trading. The key is you have to make more than what you lose. So obviously, you want to keep it down. So you can keep a tight stop, say, oh, it's going to be like a 2%. Well, you lose 2%. But again, once it comes down to this point here, then you can buy that level and you say, well, I not only made my 2%, but I made another 5% back on top of that. See, that's the key is. But just go there and just say, I'm going to take it for 20. I'm going to add more 18. I'm going to add more 60. I'm going to add 40. That's a complete loser way to trade. Just don't do it. Just get stopped out, take the loss on there, and let your winners run. That is how you absolutely want to trade. So if you're scalping trades, this is how you want to set it up. You want to have a tick chart, a 1 minute, a 5 minute, and a 15-minute chart. Okay, that's what I got for you on all the charts. Just a quick review. I use simple moving averages, your 8, your 21, your 50, 100, 200-day with price channels, okay? And then I use the volume, RSI, and MACD. That is all you really need to trade. Keep everything what you're trading, keep it simple. The more simple you have it, the easier it is to trade. Now, in my office here, I have 2 PCs and I have 10 screens. So all I really have to do is just look up. Now, I don't need that to trade. When I go out of town, like a motel, I take a laptop with me. I can trade it off of that. I can trade off a tablet. I can trade off a phone. But when I'm out of office, I just want to look up and I got everything, right there. So however you trade, just keep your trades simple. Don't be afraid to get stopped out every so often. I'm not talking, I'm just going to trade till they stopped off. And always wait, okay, to say, hey, I'm going to wait for a higher low when that pulls back, and then I'm going to get in, and then I'm going to take a ride. But don't be afraid to take profits. That is the key. All right, that's what I got for you on the charts, and I'll be back tomorrow, and we will review how to trade, basically scalp trading, swing trading, and long-term trading. Thanks for watching.